I'm Matt Bouchard here in New York City for NAREIT's REIT Week 2018 Investor Conference. Joining me today is Michael Schall, President and CEO of Essex Property Trust. Michael, thanks so much for joining us.
Hey, it's great to be here. Thank you.
Now, how are the supply-demand fundamentals holding up in your core West Coast markets?
You know, I think the West Coast is doing well, especially on the demand side. I think the economy is better than we expected. Job growth is better than we expected. Throw some numbers out, 2.2% job growth as of April, trailing 3 months, versus our expectation of 1.6%. So a little bit better than expected, better than the United States. The tech markets are really driving the demand for housing and driving the job growth as well. So I think the demand side of the equation is in good order, definitely improved from 2017. On the supply side, we continue to have periodic disruption from apartments, mainly in the downtown areas where deliveries of new apartments are competing against one another. And to do that, they are offering concessions that are from 6 weeks to 2 months, which is enough to draw people out of stabilized communities and essentially disrupt price in the immediate area. So we have that headwind, and I think that will continue for some time. But overall, we're doing well. We expect market rents to grow about 3%, which is a decent year.
Great. Now, when you look broadly at the population migration in the U.S., what trends jump out to you? And is the West Coast seeing growth, and how sustainable is it?
What we found was that the high income earners, highly skilled people, were moving westward primarily from several of the large East Coast metros. The high cost areas essentially on the East Coast, moving to the West Coast. And at the same time, we were losing people that were in the lower income ranges that were moving to other Western states. I suspect that's retirees, selling their house, moving to a more affordable location, et cetera. It's important that we do that because we're very concerned about affordability of apartments in our markets. And so as a result of having high income people move into California and lower income people move out of California, actually our personal income is growing at about 5.5%, which is making our apartments more affordable and solving that issue. So it's an important puzzle piece to the overall equation.
And lastly, you've talked in the past about the potential impact of California repealing the Costa-Hawkins Rental Housing Act. What are the unintended negative consequences rent control has on the housing market?
Yeah, there are a long list of negative consequences. Maybe by way of background, Costa-Hawkins is a California state law that limits the severity of rent control. There are certain parameters that are acceptable in rent control ordinances that are adopted by local governments, and then it basically restricts that. So if you repeal Costa-Hawkins, it opens the door to more extreme forms of rent control. And there's a variety of studies, and I would actually recommend a website, www.savecostahawkins.org, that goes through this in much more detail. But the simple answer is a couple of things. Number one is it will reduce the amount of housing that's built in California because extreme forms of rent control have been studied in great detail. San Francisco was one recent study, for example, that concluded that when you have extreme forms of rent control, you produce almost no housing after that. So that would make California's chronic housing shortage, which was recently estimated as being short by 3.4 million housing units from 2000 to 2015, it would make that even worse. So that is one of the unintended consequences. I guess the other one is that it would reduce the availability within the marketplace of apartment units. And by that I mean, because people that are in a rent control unit will generally be paying less than market rents, that means they will stay in their unit longer, which means fewer units will be available for people that are moving into the area, and they will be higher priced. So it actually has the effect of hurting the people that it's designed to help. So yes, the people that get a rent control unit will be better off for sure, but the people that are looking for a unit will be worse off because availability will be impacted, and of course it will hurt the lower income thresholds more because Typically, landlords will raise the income requirements and financial requirements to draw the best renters possible. So it has a number of other unintended consequences. Again, that website will help navigate through them.
Great. Michael, thank you so much for joining us.
Thanks. Great to be here.
For more from NAREIT's REIT Week, be sure to visit NAREIT's website, REIT.com.